Thank you very much. It's a great pleasure to be here today and giving a little bit of an update on the business and how things are performing in India. If we could move on to the next slide, please. Next slide. Next slide. Thank you. So Findi as a business has more than 175,000 touch points across India for both its physical and digital businesses. So on the physical side, we're in 28 states and 8 territories for our ATM product. We have in excess of 12,500 ATMs currently operating across India, and that's across 2 segments. One segment is brown label ATMs, where we own and operate on behalf of major banks, their ATM networks across India. And then we have white label ATM operations, which is where we partner with franchisees. We own the ATM and it is branded Findi. And we acquired a business last year from Tata, which gave us a national footprint of more than 4,600 ATMs. And I'll also give an update on this in terms of how that sales pipeline of growing that business in terms of acquiring new merchants is expanding very, very nicely. We turned that sales channels back on in September of this year. And as we updated the market just a week or two ago, that was in excess of 1,200 franchisee sales in almost 45 days. So very happy with how that channel is now coming through. And then on our digital banking side, which is cornerstoned by Bankit, which is a business we acquired at the very start of this financial year for us to complement our existing Findi Pay business. As mentioned, that is now in every state and territory across India, more than 175,000 KYC locations and a further 100,000 non-KYC locations on top of that. And that business, as we updated the market, has now hit record numbers. We're in excess of 5.3 billion GTV, and we're acquiring merchants organically at the tune of between 2,000 and 3,000 per month, steady state every month. So growing very, very nicely since we acquired that. The business is now in excess of 30% from our digital sources across our entire business, which is obviously up significantly from last year. The market opportunity for us is huge in India. It's the most populous country in the world, more than 1.4 billion people. There's 350 million people that are currently unbanked, or 25% of the adult population. We are working very, very, very closely to ensure that our mission is actually delivered, which is to actually serve as a vehicle that drives the unbanked towards financial inclusion and social mobility. And the way that we're also doing that is not only helping these 350 million unbanked, but also the additional 450 million that we would call underbanked. So there's more than an 800 million target market for both sides of this business. And India as a market is quite unique. Both cash is growing in circulation and cash as a percentage of GDP is continuing to grow, as well as digital. So both sides of our business are really well positioned to take profits and take opportunities for growth over the coming 3 to 5 years. If we can go on to the next slide, please. As I've spoken through, there are a number of key investment themes that really underpin Findi and what we're doing and wanting to deliver over the next 3 to 5 years and beyond. We have very favorable tailwinds. As said, cash in circulation is increasing. ATM penetration rate is very, very low in India, only 21 per 100,000. Global average is 39. Market like the US is almost 160 ATMs per 100,000, and countries like China are at 95 plus per 100,000. The Reserve Bank of India would like to see ATM penetration rates closer to 35 per 100,000, and they're really supporting that with their own policies. And what they have done recently is they've actually increased the interchange rate, making it more profitable for us to deploy our white label and brown label ATMs across India. And we expect there to be further increases in the future as well in that interchange rate, with the Reserve Bank of India on average increasing that interchange rate every 2 years. It's now at 19 rupees per cash withdrawal and effectively 8 rupees per balance inquiry. And the reason why they're wanting to do that is they obviously want more ATMs deployed so they can increase that financial inclusion and bank more of that unbanked number that I spoke of. We have a very robust BLA business with long-term contracts. Average contract value or tenure for us is 7 odd years. More than 80% of our revenues on that side of the business have 7 years or longer tenure. We just recently won a significant new contract with the State Bank of India. That was more than 4,250 ATMs that we're currently deploying at the moment. That will see that's a 7+3 contract, so 10 years there on that side. As I also mentioned, we have a fast-growing digital business. We have in excess of 30% of our revenues now coming from the digital side of the business. We're targeting for that to go closer to 45 to 50% over the next 2 years, and looking for that to exceed 40% as we strive towards our Indian IPO of our subsidiary, TSI India, at the back end of next year. So we're targeting a listing window of December 2026 through to March 2027. And as you can see here as well, our GTV has increased 43% in that business since April 2025. So very happy with how that's performing. As I mentioned as well, we've had very strong growth in our white label business in terms of franchisee sales. When we turned sales on in the first 30 days, we delivered 560 white label sales. That was from the 15th of September to the 15th of October. By the end of October, that 560 sales had actually accelerated to in excess of 1,233 as we announced to the market at the start of November. As also mentioned, we've successfully completed 2 acquisitions, one on the Bankit being on the digital side and the other being Tata's white label ATM business. And then finally, we've had a strong track record of delivering profitability with our management team as we go through, and we're now largely funded for our CapEx rollout. And I'll also give an update as to where we're at with that process, which is very, very positive in the last few weeks. Can we have next slide, please? As I've spoken about, we're here to be working towards a listing of our Indian subsidiary on the Indian Stock Exchange. We've gone through 3 phases, or we've got 3 phases of which we've delivered 2 now. Stage 1 was the portfolio diversification and expansion, having a truly national business for our physical part of the business. The second was focusing on our digital transformation and growth side, which is the future as we continue to grow on. The acquisition of Bankit was able to accelerate that for us. We had organically grown our digital business from 5,000 locations when we took over the business some 3 years ago to more than 60,000 locations. But as stated, that Bankit acquisition now means that we've got more than 65,000 locations across India that have full KYC, and a further 100,000 locations that are going through that KYC process. And we're in every state and territory. And then the final pillar that we're going through, and which we're starting now, is the initial public offering, which is stage 3, to unlock significant shareholder value. The valuation ranges that we've been given by our investment bankers and lead brokers on that is 750 to 900 million. And at those levels, that would mean that we would be able to unlock for existing Findi shareholders more than 1 times our current market cap in cash coming back to Australia. So a very exciting time for where we're at, and also a great optionality for our business, because we will still have a significant ownership in that business post-listing, but we'll also have a significant capital return as a result of that, and we'll have a subsidiary that is also sitting with significant amount of cash and 0 debt. If we can have next slide, please. The other element that the IPO of our Indian subsidiary does for us is actually delivers the final pillar for us to be able to become eligible for a full-fledged payments bank in India. The final criteria that we don't actually meet at the moment is foreign ownership. We must be less than 75% foreign owned. And that IPO event that we're talking about delivering in December 26 and March 27 is a great way to deliver that final criteria and also realize significant value for shareholders at the same time. Next slide, please. Next slide. Just wanted to highlight a couple of points that we've gone through. 2026 has been a transformational year for us. We have now integrated 2 significant businesses. It took us a good 6 months to understand and reposition our white label business. We took on 4,500 plus ATMs at that point in time that we came through. We rationalized the bottom performing 600 to 700 of those immediately, and we're in a repositioning phase for the final 1,500 of those over the coming 12 months. But most importantly, we've now got a significant warehouse of ATMs for us to roll out. And as said, when we turned on the sales channel, we've now delivered more than 1,233 franchisee sales in that pipeline. One of those sales was to a channel partner that has 1,000 white label ATMs that they can bring across to us. They have committed the first 100, and on successful delivery of those 100, they will then convert the final 900 that they have. And the reason why they came across to us was not a financial reason, it was a technology reason. We have a leading platform that we developed in-house called ATM 360, which enables franchisees to see all of their live ATMs and allocate resources accordingly to see whether they need cash replenishment, to see whether they have any maintenance issues or predictive maintenance coming up, which none of the other competitors in the market have. So it was good that it was a technology advantage for us as to why they've come across. And in the last announcement, we also stated that there is another significant, in excess of 1,000 ATM channel partner that we're also working on, and we're hopeful of announcing that pre-Christmas as well. There's a very real chance that we could almost deliver our entire 2026 sales pipeline for white label before Christmas of this year. So a very envious position for us to be in for the Indian team. Also mentioned, our digital business has grown greatly, up 43% since April of this year. At the end of September, we were at 5.1 billion. At the end of October, we're actually at 5.3 billion annualized GTV. So very, very happy with how that business is going. We've also just recently announced the acquisition of a small loyalty and rewards business, Sphere, which also provides ESG solution for the ability to offset the carbon footprint for digital transactions for our finance network. But most importantly, that loyalty and rewards will be built across Findi Pay and Bankit and will be the first white label operator in the Indian market to have a rewards program for the ATM network. We also received non-binding commitments for a $30 million debt facility with scope for that to further increase. We're very happy that we're likely that is going to be upsized and will be closer to $50 million. And I look forward to updating the market in the next week or so as we bring that to fruition. And we also are expecting a significant commercial debt facility to be finalized in the coming week of a further $40 million, which means that our CapEx pipeline for the rest of 25 and 26 calendar year is all fully funded. So very happy with how they're progressing, and we'll formally update the market when those are finalized and put in place. Can we have next slide, please? I think this is just a quick visual slide to be able to show how far we've come in the last 24 months. Effectively, 2025 and prior, we did have a national footprint across India, but it wasn't a very, very dense footprint. As you can see now, with on the right-hand side there, we have great penetration of the odd 22,000 PIN codes across India. We now have deep penetration in more than 14,000 of those. As said, there's including our ATMs and our KYC locations, more than 175,000 touch points now across India. We have more than 2 million people that use our products on a daily basis and continuing to grow very, very strongly. Next slide, please. Just quickly touch on this. FY25, we delivered $61 million in revenue, operating revenue for the year. This year, we're expecting to deliver between $100 and $105 million of operating revenue for the year. So very, very strong growth from last year. Most importantly, the exit run rate that we're expecting to exit Q4 this year is in excess of $130 million exit run rate and growing strongly. EBITDA last year delivered was $20.6 million from operating EBITDA. We're expecting to deliver a similar number for this year, excluding one-off items for FY26. But again, most importantly, the exit run rate for FY26 is in excess of $30 million EBITDA for March as we exit the FY26 financial year. So very strong trajectory that we've now gone through. And the banking facilities that I mentioned means that we're now fully funded as we go through. Our IPO process is on track for the second half of FY27. We're a 31 March year end, but as stated, the target listing window for us is December 2026 through to March 2027. And as I've said earlier, Rothschilds, who's our financial advisors on that process, have reconfirmed our IPO valuation ranges of 750 to 900 million. Next slide, please. Next slide, please. Next slide. Yeah, there we go. So the acquisition of Sphere, I'll just quickly touch on before I go to the floor for questions. This is a small acquisition for us, but it really gives us a capability that we were needing to deliver us or build ourselves, which is a rewards capability across our business. So Sphere will be already provide rewards for the largest digital bank in Dubai, or the UAE. So it's a turnkey solution for us that we will apply across our white label business as well as our bank business as well. It also gives us operations in 3 other countries outside of India for our services in basically for Vietnam, Malaysia and Singapore. And then it also gives us another ESG-centric product that we will be able to provide and offer to all of our merchants, which is effectively carbon offsetting for all of the digital transactions that we do. And that'll be a market-leading position. And they partner currently now with Visa and in discussions with MasterCard to be able to roll that out across India with our existing significant banking relationships that we have on our ATM side of our business. So very, very happy with this acquisition, and we're looking to finalize this acquisition at the end of November. And as a result of this acquisition as well, on next slide, there are 2 new board members that are joining the business. Stephen Benton, who's the former CEO and MD of FPOS Australia, and he was head of consumer finance and emerging business and payments at Westpac. Stephen will bring great banking credentials to us as we transform into a full-fledged payments bank in India. And then Tine Matanda has a great background from Salter Brothers in private equity and venture capital funds with strong experience in emerging markets in Africa and Asia. So the addition of these 2 individuals to our business on the board level we see is very, very value added as we strive towards that Indian listing. I've spoken about the funding update and I'll leave it there and we can go to some questions.
Thanks, Nicholas. Great presentation. Clearly, it's been a tough year, as you've said in your presentation. That sort of had to sort of put the head down and just get it done. There's some questions here around drop in EBITDA and probably a bit of a market misstep, I suppose, between the share price and value. Do you think that's just been because this has, in a lot of ways, had to be a very transitional year to get to where you are now? And I suppose the other element of that is the educative process to let shareholders know and the wider investment community know, not just about the business as it stands today, but sort of the big part of the business that's going to be value accretive in the coming years.
Yeah, correct. Betting down the two acquisitions that we went through, the white label business, if we look at where we've had probably the biggest miss or the biggest work to get our head around has been on that side of the business. We've now understood exactly where that portfolio is at. We're repositioning that, and now we've turned those sales back on. And for us, being able to deliver that 1,233 franchisee sales in a little over 45 days has been fantastic and really underpins the future of that business. And the fact that we've got two channel partners, that one of them could deliver in excess of 5,000 ATM locations and another will deliver another 900. As said, those all collectively will deliver almost 7,000 franchisee sales if they're all delivered. And that is our entire 2026 sales pipeline that could be done before Christmas. So it enables us to just focus on rollout and delivery of all of our numbers now. And all the integration is behind us, which is great.
And you talk to the integration, and there's some questions here, so that there's no point not asking the question. But integration by nature is always a tough thing to go through. There's extra costs that you probably didn't necessarily see coming. There'll be some write-offs and other things. Is that sort of reflective of just the year you had to go through to really bed these things down properly? Take a few hits along the way, to be fair,
Yep.
but position the business to flourish moving forward.
Yeah, that's exactly what we have done. I mean, we've implemented a SAP system across everything. So everything now operates on one financial reporting system. We moved everything, all our Bankit merchants onto all of our Findi Pay merchants onto the Bankit platform. So that's operating on one platform. As you would have seen in those financial numbers, we've taken a hit of about 7.1 odd million dollars of additional one-off cost in this financial year, which we won't have going forward. But it was something that we had to do to ensure we had a fantastic base as we go into the IPO and beyond. And we're very happy with how numbers have rebounded on both revenue basis, a run rate to date that we updated the market just 2 weeks ago, and the exit run rate that we'll have for FY26 for March. We're on track to be delivering or exceeding those exit run rates, which is a testament to making the hard call, but the right call in the medium term for the business.
Now, let's look forward or look at the Indian business in particular. Momentum, I think, is a key word. What's driving that in the Indian market?
For us, it's our Bankit business and the rollout of BC Max centres and what we now call Unati centres as well, which is a white label version of our BC Max centre, which is effectively a financial hub and education centre where we become the trusted financial advisor in these communities. We've got an aspiration for there to be several thousand more of these over the coming 12 to 24 months. And they effectively become the cornerstone or the backbone of our branch network for our payments bank aspirations that we're looking to deliver. We've got the ability to continue to put more and more products through these centres. And as we put more and more products through, the margins expand on that business, which is where the future is for us.
Scale. A business like this is really about scale and how you can scale it. How scalable is your digital payments infrastructure as you expand into new regions?
Well, our internal target is at the moment we're 165,000 KYC locations. We would like to be at 1 million of those over the next 24 months plus. And we believe that that's still only a drop in the ocean in terms of where we can be. We think there is an addressable location available of about 55 million locations across India. So as I said, we're at 165,000 at the moment. We're targeting to be 1 million over the next 24 months. And we would like to expand past that post the IPO.
Last few questions. Can you step us through your strategy to evolve into a full financial ecosystem provider?
Sure. So it's building out that Bankit business and closing the loop with cash and digital by co-locating at strategic sites, white label ATMs. The benefit of a white label ATM for us is we can directly market to that customer and capture that customer data as well. So that enables us a very low cost of acquisition for our digital business, which is a competitive advantage that none of the other players that we have that we're up against have. and we are slowly bringing on a product suite one by one to enable us to have more and more products that we have. As said in this presentation, we had 7 core products. We're going to 8. With those banking centers, there's actually another 20 odd banking products that we partner with the banks to provide, and it's how many more partnerships can we deliver over the coming period to increase that effectively what is a distribution as a platform business, increase the products that we have over the next 2, 3, 4 years of higher margin, higher value add products, and be the trusted location for these customers of ours.
Final question. What are the key milestones and catalysts for the next 12 months? What should investors be focused on?
For us, it would be franchisee numbers that we're bringing on for the sales channel and turning them into cash live locations for the white label side of the business. And then it's the GTV growing and margin expansion. At the moment, we're at about a 6% EBITDA margin on that digital side of the business. We're wanting that to almost double as we lead into our IPO. And it's the exit run rates on a quarterly basis as we continue to grow into that December 2026 IPO window opening between then and March 2027. And we'll be looking to file our DRHP, which is our red herring or our corporate filings for the IPO on the completion of this year's financials. So around May, June of this year, that'll be done on a confidential basis. And then, as said, looking for about a 90 to 120 day approval window post that. So to be ready for listing in December of 2026.
A lot's been done, but setting yourself up for a massive 12 to 18 months. So, Nicholas, thanks for your time. We look forward to following with interest.
Thanks very much. Cheers.